Hello everyone, my name is Bella. I had a recent discussion with my friends. We've shared our stock exchange experiences and all of them prefer short-term trading as much as I do. Today, I will share with you a practical short-term indicator. Now, this short-term indicator was also taught to me by Mr. Anderson. Well, I use it myself a lot in stock trading. It is the Williams indicator. Now, I'll share the details with you on how to use this indicator to select stocks. Let's take the US stock market S&P 500 as an example. This is the daily chart of S&P 500 from June to November. There are two relatively good market trends for US stocks in the second half of this year. The first wave is the wave of rise on June 17. There is also this wave of rising that started on October 13. Just like other investors, we are curious to find out a simple way on how are we able to notice these two waves at its peak and seize these opportunities. Today, I will explain the method on how to take advantage of this opportunity. This is the perfect chance to recover from the market crash. This short-term indicator that is underestimated by most investors is the Williams indicator. The Williams indicator was first proposed and developed by Larry Williams in 1973. Very practical but ignored by many investors. It belongs to the technical indicator for analyzing the short-term trading trend of the market. It uses the relative position of stock price fluctuations to determine whether the market is overbought or oversold. It is a volatility indicator with strong randomness. Now, Williams indicator has two key areas. One is 0 to 20. This position indicates that the stock is in the overbought zone. This means that the market has reached extreme levels and an extended price to move to the upside, a stage where you can no longer chase high and buy. When the Williams indicator is in the 80 to 100 region, it means that the market is oversold. Then, this could be a sign of backing out. Stocks always go up. Exactly how to find the starting point after the stock does not continue to fall. Let's take the S&P 500 as an example. The above is the K-line diagram. Below is the two-line Williams indicator. The red line indicates that the stock's mid to long-term trend. Green indicates the short-term trend of the stock. This wave of decline in early June is estimated to be impressive to many people. But opportunities always come after the stock price has fallen. When the stock price above is falling, the following two lines of the Williams indicator are slowly moving upwards. On June 13th, both lines positioned in the oversold area. It shows that the stock price has entered an oversold state in the short and medium term. Note that there is a very important point here. Being in an oversold state does not mean that its price will rise immediately. Oversold can only show that the stock is in an abnormal state at this time. But stocks may have been falling. In which position would indicate that the stock has fallen more than it should and when it will rise soon? Stock prices are oversold in the medium and short term, and the two cycles form a resonance. Both medium term and short term have fallen beyond decline. There will be a reversal performance on indicators. That is, the Williams indicator is in an oversold area forming a crossover or bunding. It represents that the stock has formed a cyclical resonance in the short and medium term. After that, the Williams indicator has crossed the 80 area line together. This position indicates that the stock has reached a critical change point. The stock is about to undergo an upward change. We should be buying the bottom. Afterwards, US stocks also ushered in this wave of nearly 2-month rise. This is the ultimate strategy of Williams indicator, God's guidance. Let's look at the bottom in October again. Is Williams indicator also applicable? After the US stock market established this midterm top pattern on August 17, shares began to fall rapidly. Certainly, This high Williams indicator also indicates a selling point. How do you see it? I will tell you when I have a chance. We're back on topic. Let's see. After the rapid decline in the market at that time, the Williams indicator began to enter the oversold area. Here it reflects the class content we just talked about. Oversold stocks may not necessarily rebound immediately. US stocks have been oversold here for nearly half a month. Then on October 3rd, both lines passed through line AT. After that, the S&P 500 rebounded here for a few days in the short term. The Williams indicator quickly broke through the oversold area. It shows that the decline in the past few days is the last wash before institutional investors pull up. If you have learned the gap theory, friends, this day's gap is also known as the expendable gap. Bears get the most out of their power. Then there will be a God guidance chart pattern at this position, and the rise of the stock price will be so strong. This is the ultimate usage of the Williams indicator. In addition to being used for the broader market, this indicator is also applicable to stocks, and the success rate is also high. Let's take AGM as an example. Compared with the market, this stock itself is a very strong stock. So once the pull-up starts, such a stock will rise particularly strongly, reflected in the indicators. In terms of Williams indicators, the red indicator is always above the green short line in most cases. This stock is a very standard N-shaped stock. The trend rises in waves, a wave of callbacks, another wave of rise among the two rises. The Williams indicator prompts when the stock price is not yet started. This stock will go up. Look at the starting point of the first wave of market here. Stocks are on accelerated decline here. It is almost impossible for you to find any signals from the K-line or trading volume analysis. But the Williams indicator quietly entered the oversold area in this wave of decline and formed a bonded intersection at the high. This is the God-guided chart pattern. It shows that the medium-term stock price and short-term cost are both oversold here. Periodic resonance. Now this is our stock selection plan. When the indicator line crosses the 80th zone, you should be able to identify that this is a period where opportunities are higher than risks. Therefore, the stock price rise in the later period is inevitable, including the recent rise in the market. The Williams indicator also tells us that this is an excellent bottom buying position before the start. AGM has also risen from here to now. Of course, AGM has now entered the overbought area, indicating that market risks are higher than opportunities. I will not recommend my friends who do not own stocks to enter the market at this time. Possible to buy high. Now here is a secret to tell you. Both of these places are up continuously. Why does it fail here? Here will be success. You will see the Williams indicator at this position. Only the green short-term Williams line crossed upwards through the 80 line, and the red one is that the mid-term Williams line did not wear it. It shows that this position is only a short-term oversold rebound, rather than a real swing up. Look here again. It is two lines crossing the 80 area line together and forming a bonded intersection. It shows that the short-term and short-term stock prices together form an oversold. So the rise here is very in line with expectations, including an ETF that friends have asked a lot about, SQQQ. Now SQQQ, which is opposite to the broader market, started this wave of rise after building a bottom on August 16. We can see that when SQQQ falls here, the Williams indicator has been trading sideways at a high level for a long time like a spring. When pressed longer, the rebound will be bigger. This is why SQQQ has risen for as long as 2 months behind. The stock price has been severely oversold. At present, SQQQ is also in the oversold area and glued. When will the Williams indicator cross line 80 at the same time? When is a great opportunity? Note that the method is not 100%. Also set a stop loss. Compared with KDJ, MACD, and other indicators, the Williams indicator is an indicator seriously underestimated by the market. If you also like to do short term, you can combine my sharing today to study the Williams indicator. I hope today's sharing can be helpful to all of you. Next time, I'd like to continue to share more stock knowledge and skills to my friends. If you have any questions, just send me a private message.